Clapperboard intro. Maria Tossie. Welcome back, family. It's Maria Tossie with the Tossie Advisory Group, where we advise, educate, and grow. Today we're breaking down every major trading strategy in 12 minutes. Whether you're just starting your investing journey or trying to sharpen your entries and exits, this video will walk you through the core technical tools real traders use daily. The same ones we teach inside Tag Premium Lounge. So grab your notebook, open your charts, and let's level up together. Abacus 1. Fibonacci retracements. The Fibonacci retracement tool helps traders find potential reversal zones in a trend. It's based on Fibonacci ratios like 0.382, 0.5, and 0.618, which often act as natural support and resistance levels. Start by identifying a swing low and a swing high, then draw the tool from the low to the high. Watch how price reacts when it pulls back. The 0.382 retracement is one of the most common bounce points. At Tag, we call this the patience zone. Combine it with confirmation, a candlestick pattern, RSI signal, or volume spike, before taking your entry. Upward trend 2. Breakout patterns. Breakouts happen when price finally escapes consolidation and moves sharply in one direction. Think of them like pressure cookers. The longer the consolidation, the bigger the breakout. You'll often see breakout patterns like triangles, wedges, or rectangles. Once price breaks through a key level with volume confirmation, it's your cue to ride momentum. But never chase without a stop-loss plan. Inside Tag, we teach, break and retest, waiting for the pullback to the breakout zone before entering for better risk, reward. Anti-clockwise arrows 3. Reversal patterns. Reversal patterns signal a potential change in trend direction. Watch for double tops and bottoms, triple patterns, and head and shoulders formations. They often form after extended moves, signaling exhaustion in one direction and the start of a new phase. Combine them with momentum indicators like MACD or RSI to confirm a real shift before committing capital. Wave 4. Elliott Wave Theory. Elliott Wave Theory says the market moves in repeating 5 wave patterns, followed by corrective waves labeled A, B, and C. Wave 2 typically pulls back near the 0.618 Fibonacci. Wave 3 is usually the strongest, and Wave 4 retraces to around the 0.382 level. Understanding these waves helps you anticipate where price might head next. At Tag, we simplify this. Follow the rhythm, not the rumor. Recognize the structure, plan your entry, and move with the wave, not against it. Balance Scale 5. Fair Value Gaps, FVG. A fair value gap is an imbalance between buyers and sellers, a space on the chart where price moves so fast that no fair trading occurred. Mark that gap using the wicks of the candles before and after the move. These zones often act as magnets. Price tends to return and fill that gap before continuing in its original direction. Smart traders use FVGs to predict retracements or continuation setups. Candle 6. Candlestick patterns. Candlesticks tell a story. Each wick, body, and color reveals market psychology. Common ones to master. Engulfing candles. Show strong momentum in one direction. Hammer and shooting star. Signal rejection at a level. Doji. Marks indecision and potential reversal. Study these on multiple timeframes. Candles are language. Learn to read them, and you'll see what the market's feeling before it speaks. Fire 7. Heiken Ashi. Heiken Ashi smooths out noise by averaging price movement, giving cleaner, easier to read trends. Green candles suggest bullish momentum, red candles show bearish pressure. They don't display actual prices, but they help traders visually stay in trades longer without reacting emotionally to every wiggle. Crescent Moon 8. Moon phases and cycles. This one's more psychological and ancient, but surprisingly studied. Some traders believe market sentiment aligns with moon cycles. New moons often align with bullish starts. Full moons sometimes bring emotional peaks or reversals. It's not science, but it's sentiment. At TAG, we say, if it influences emotion, it influences price. Use it only as confirmation, never as your foundation. Bar Graph 9. Renko Charts. Renko charts filter out noise by printing a new block only when price moves a certain amount, say, 1%. Green blocks mean uptrend, red blocks mean downtrend. It's clean and visual, great for spotting structure and ignoring intraday chop. But remember, Renko charts show momentum, not actual price in real time. Butterfly. 10. Harmonic patterns. Harmonics use Fibonacci measurements to identify geometric price shapes, like the bat, butterfly, crab, and Gartley patterns. Each has strict ratios, allowing precise entries and exits. They're advanced, but powerful. At TAG we call them market geometry. Once you master harmonics, you stop chasing price. You start forecasting it. Brick 11. Support and resistance. The foundation of technical analysis. Support is where price has bounced before. Resistance is where price has been rejected. If price revisits those zones, expect a reaction. Plan your buys at support, sells near resistance, and confirmation from candles or volume. Downward trend 12. Dynamic support and resistance. Instead of flat levels, dynamic zones move, usually using indicators like the moving average. When price stays above the moving average, that line acts as dynamic support. When below, it becomes resistance. At TAG, we use the 20 EMA as our speed line. It helps spot pullbacks and live trends. Triangle Ruler 13. Trend lines connect swing highs and lows diagonally. An uptrend line connects higher lows. A downtrend line connects lower highs. When price retests a trend line with volume, that's your cue to trade with the trend. Remember, trends bend before they break, not after. Straight Ruler 14. Gann Fan. Gann Angles WD. Gann created a set of angles, 1 by 1, 2 by 1, etc., that measure trend strength and time cycles. Steeper angles suggest strong momentum, shallow ones show weakness. It's a mathematical way to visualize harmony between price and time. We use it mainly for timing potential reversals or confirming wave structure. Gear 15. Momentum indicators. Momentum tools like MACD, moving averages, super trend, and parabolic SAR help you gauge the strength of a move. Example: MACD crossover up equals bullish price above MA equals strong trend, SAR dots below equals bullish pressure. These are best used in trending markets. They help you ride the move, not fight it. Roller Coaster 16. Oscillators work best in sideways markets. They measure how overbought or oversold a price is, helping you time entries. RSI above 70 equals potential sell zone. RSI below 30 equals potential buy zone. Stochastic crossovers confirm reversal. Timing tag tip: when oscillator and trend indicators agree, you found a high probability setup. Repeat button 17. Divergences. A divergence happens when price and an indicator disagree. If price makes a higher high but RSI or MACD makes a lower high, that's bearish divergence, a warning sign. If price makes a lower low but RSI makes a higher low, bullish divergence, signaling reversal potential. These moments often precede major turning points. Watch closely. Speaker 18. Volume indicators. Volume confirms conviction. When volume spikes align with breakouts, the move has strength. Key tools. Volume bars, confirm buying or selling pressure. VWAP acts as intraday fair value. Volume profile shows where the market spent time building value. Smart traders trade where the volume validates the move. Money bag 19. Supply and demand. Order blocks. Order blocks are zones where institutions made major trades, pushing price strongly up or down. A zone that sparked a strong rally is demand, one that caused a big drop is supply. When price returns to those zones, it often reacts again. Think of them as footprints of smart money. At TAG, we teach. Retail follows emotion. Institutions follow imbalance. Brain 20. Market structure. Market structure tells the story of trend progression. Uptrend. Higher highs and higher lows. Downtrend. Lower highs and lower lows. Recognizing shifts in structure helps you plan your trades like a chess match, not a coin toss. Crossed swords 21. Break of structure, BOS. When price breaks the previous high or low, it confirms that structure is shifting. A break of structure signals continuation, not reversal. This is key for intraday traders spotting momentum. Anti-clockwise arrows 22. Change of character, CHOCH. A change of character occurs when price breaks the opposite structure, signaling a trend reversal. Example: if the market was forming higher highs and suddenly breaks below a previous low, momentum has changed. This is often your first clue that buyers are losing control. Bullseye outro. And that, family, is every major trading strategy, simplified, explained, and connected under one roof, the Tossie Advisory Group. Remember, tools alone won't make you profitable. Consistency, journaling, and emotional control will. To dive deeper into how to apply these tools to real trades, visit TossieAdvisoryGroup.com and start your 7-day free trial. You'll get full access to the TAG Premium Lounge, our automated stock journal, and live Sunday sessions. Maria Tossie. This is how we build financial literacy, one trade, one habit, one goal at a time. Stay focused. Stay faithful. I'll see you in the next class.